Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs and articles on ospreystrategic.org as well as stockcharts.com. Still got a market trying to rally here, but I think the big issue we've got is literally as the market topped out in the end of July, all of these metals had just started to break out and they literally collapsed to start this week. And it's starting to make me wonder because we're seeing a bigger picture, a lot more damage going on here, especially in the industrial metals, precious metals, commodities in general. The currencies are starting to soar. So it's really quite an odd setup. So what I want to cover off is the current market, and I've been away for a couple of weeks, just ended up having a bit of a medical issue. So hopefully we get that resolved and everything will be fine. Anyway, I'll cover off where we've been for the last few weeks, and then get into the copper stocks as they're breaking lower, and then I want to show how they failed to hold the breakout and why that's probably a bigger thing. And again, if you like the work we do, you can always head over to ospreystrategic.org and try our 1-month trial offer for just $7. And if you like it, then you can just stay for the regular subscription. Okay, let's jump into why that didn't work. There we are. Okay, so what I want to show here, so this is the S&P 500, basically going back to the end of July, started to slide, and we made lower lows on Tuesday. The NASDAQ is holding up a little bit better, but still lower lows. And so the S&P 500 is sitting right on its 50-day moving average. The NASDAQ actually looked like it tried to get above its 50-day and now closed back below it. So that doesn't look very good. And now its PPO is at the lowest level since January. So that's quite a remarkable difference for us. So really noticing the change in momentum. So we'll have to see if there's any real strength there. One of the big things that we're watching for, 468 was the prior high back in 2022 for the SPY, and we got up to 459, call it 460. That's pretty close for a technical trend. And for the NASDAQ here, 404 was the prior high, and let's call it 388. So we were within 5% of the prior high. Now, what we want to watch for here is just, does the market have any sort of strength, or do we start to see a whole bunch of different groups start to break down? And there's lots of reasons to be more concerned. I don't know if that's the right way to phrase that, but if I look at the US dollar, maybe I'll just go into one of my chart lists here. So in the US dollar, one of the things that I'm noticing, so this is a trend line that we've seen going back to November. So once the stock market started to rally, you can see the US dollar started to get weaker. Now we're coming up against the 65-day moving average. And so are we just going to bang our head on the 200-day moving average? 65 is in black here. Are we going to bang our head up here on the 200-day moving average and roll back down? Or is this where we run into big problems? And I got to say, based on the price action of the metals and industrials, it's starting to look a lot worse. So literally the Chinese yuan, the Japanese yen, the euro, the British pound, the Canadian dollar, Aussie dollar, they're all starting to go on weekly sell signals on their PPO momentum indicators. And so it seems like all of a sudden the dollar wants to rip higher. Now, the real important thing that we'll need to watch for here is, does this dollar stop in the last week here, and did it just threaten everything, or are we about to see a real big change in the setup for the US dollar? So that's one of the things that's got my focus, and I wasn't very excited by the price action here. So this is the the gold miners. And what you see here is this chart's literally breaking down. It's already down 4% in just 2 days, but the PPO is going into a negative breakdown here, and that's not very good at all. So really not a comforting position for that to happen. And then when we go look at the COPX, this chart, the PPO is now back on a sell signal and is breaking down and is just barely above zero. So that needs to hold up. And you can see here, here's the 40-week moving average, and we're starting to go back below that. So, you know, on this chart, you can see we closed right at the 40-week back in May, and going all the way back to December, we have been above that. So if all of a sudden we're starting to see these copper miners break down, and again, it looks like they tried, and now they really seem to be failing aggressively. So I'm going to show you the numbers on that data, and here in this case, if we just took this and draw this trend, what is becoming quite obvious to me is that the breakdown here of this uptrend, so the relative strength compared to the S&P 500. So what we wanted to see right here towards the end of July was we wanted to start surging. This had hit 42.05, trying to get above this 41.52 and 41.87. Well, not only is it not at 42.05, this is already at 36.50. It's given up $5.50 in 10 days. It's been an aggressive move lower. So very, very quick downturn here. Now, one of the reasons that is so concerning for me, I think, is just that I was expecting this whole thing to kind of, we'd have a market correction, but we'd have the NASDAQ pull back a little bit, and then we'd start to rally out of that hole. And instead what we're getting is all of a sudden we're starting to see a bigger, broader picture of weakness in some of the other markets. And an example might be EEM. So this chart's breaking below its 40-week moving average. That's not really a good look. PPO is back on a sell signal here. So all of a sudden, everything that was looking good 2 weeks ago has literally changed. And, you know, if we go back and look at what happened in 2021 for the euro, or for the emerging markets, once it started to get below the 40-week moving average, it took almost a year and a half to get back above it. So here we are, we've been trying to get above it, and to start the week so far, we're drifting back below. So now it's starting to make us ask a few more questions about why this isn't holding up. So it's one of the issues that I'm starting to see, and when we look at things like the SMH, the semiconductor area, we've got a sell signal breaking on the PPO, but at a very high level. But again, you know, this chart's making lower lows and lower highs, so that's not a great look. We'd obviously like to see this hold up. NVIDIA caught quite a bid on Monday, so we'll just see if we can kind of get a little bit more grasp of the technology area. And IGV, the software ETF, is trying to hold up, but it's already on a sell signal here as well. So the real question is, you know, when we struggle so much to start the week, or the month actually, and now we're looking around and we're starting to see the rest of the world slip a little bit. When I look at places like, here's Germany, and this is drifting a little bit lower. When we look at France, this is just still sitting sideways. Again, it made its high way back in March, April, and hasn't been able to break out, whereas you think about the US markets doing so well. So that's a real question mark for me. And why are these charts not able to kind of keep pushing? So something that I'm paying more attention to, and it's really one of the areas that I think we'll need to focus on quite importantly. So let's get into some of the actual materials. And what I want to talk about specifically here is this is just material stocks over $1. And what we've got here is this is the price action in 1 week. Now this is a 9-cent stock, so I'm not too worried about it. But what we see here is everything is falling pretty hard, and even down here we've got a few stocks that are holding up only down 2%. So I don't know, are we just going to kind of have a drop here and then the US dollar hits its ceiling and then we finally roll back down in the dollar and we finally see all of these commodities turn up? It's a great question because these actually started to get pretty messy. So we had the US steel issue come out on the weekend where Cleveland Cliffs was trying to buy them. But what you see is so far this week, we've got whatever 10 stocks that are doing okay. But if we scroll to the other end of the deal here, we got some stocks down 10%, 8%, 7%, 6%. These are pretty big drops. Now, we can go look at lots of the names. I think what I'd rather do is kind of individually go look through some of the more important names. But here's Hubby Minerals. This chart's been behaving better recently. But when we look at the chart, look at this drop on Tuesday, just literally letting go, and clearly it made its high on the first of the month. That's a pretty weak breakdown. So the real question is, will it start to get some sort of a rally in here? But this is breaking below the 100-day moving average, so it really didn't hold up very well at all. When we look in on Century Aluminum, this chart, this is just showing on a weekly, but again, we're back near the May lows, and it wouldn't take very much to make new 2023 lows if we just got into the chart here. So let's just open this up to 9 months. And what we can see there is this breakdown here. It's got the lows of May and December just barely a little bit lower from here, but all of a sudden these charts are really breaking down a lot harder than I might have expected. So that was one surprise for me, is to start to see some of these charts break down. Now, when we look at Vale, so this one, this chart again 4 weeks ago was at 1485. It's at 1222 or 1227. So you're down $2.50, call it, in 3 weeks. And what was up around the 40-week moving average is very close. 1213 was the lowest close we had, or the lowest price action we had in 2023. And this is at 1227, literally unloading downward, down 5% this week. So that's a pretty, I think, a pretty aggressive drop. And I'm not really, it seems to be more of a bigger trend change. Now, when I look at Freeport-McMoRan, maybe I'll just go here. This chart's down 4%, but again, the same thing, 46.39 here, 44.70, and it's now below its 10-week, just barely above its 40-week. But this is at 39.85, so it's down 10% in 2 weeks, and just not seeing great price action. Now, when we look at that chart, and maybe I'll just use this one over here to point it out. But here's FCX. What you're seeing here is the chart. This looks dramatically more difficult and a bit of a surprise. So I'm puzzled why all of a sudden these charts are letting go, like literally meaningfully moving lower. So we've already covered off Vale and Freeport-McMoRan. Now we can cover off a few other names, and BHP Billiton is one of the other big miners. So we'll just go get that chart. But here's BHP. And what I don't like here, again, this is barely above the closing lows for the year. All of a sudden, and just in late July, we were near the highs for the year, and all of a sudden we're near the lows. This thing's really changed heartbeat relatively quickly. There's one more here. I want to find Southern Copper, and I just don't see it, so we'll just go type it in. But Southern Copper, again, a lot like the Freeport McMoran, this still looks stronger. At least it's up near its prior highs. But I don't know why all of a sudden all these charts are really starting to break quickly. So I do think there's something more important starting to go on here. And when we look at China, dollar sign SSEC, so this is trying to hold near its lows of June, July, August. And what we need to see here is this start to rally up here, because this is again near the lows for 2023. And we'll just go back here. So here we are in January. Let's say January the 6th, we got up to this 3150 level, and now all of a sudden we're struggling to hold above those prices. So on Monday and on Tuesday, the market pulled down, and now it's trying to rally. So maybe perhaps there's a place where, just starts to turn, or they announce something and get something going here. But these names are really showing a lot more weakness than I might have expected. That's for sure. So I think that's one of the bigger concerns I have for these charts is looking back at the drop that we're starting to see now. When we, if we just say for 1 month. This is a pretty meaningful group here. You've got a lot of stocks down more than 10% just in a couple of, really since late July, breaking down, but very few are pushing up to the upside. We did see some nice price action in Cameco and some of the uranium names, but they're now all of a sudden starting to pause as well. So I'm trying to figure out why all of a sudden these commodities are really, really weak. And again, when I want to rotate that back, I want to go back and I want to look at the US dollar. Maybe I'll just go over here. So on that US dollar chart, this becomes pretty important here. And again, if this is going to go back above the 40-week moving average, that's quite a big change. And you'll see here in 2021 through most of the bear market of 2022, the US dollar was rising. So the question is, why all of a sudden is this dollar starting to be so strong? And we're on a PPO buy signal. Well, if we go to the British pound, this chart's starting to break lower. The PPO is on a sell signal already. Any sort of uptrend we had is starting to work its way lower. And really when you started to see the British pound top out here is when the stock, or when the currency topped out. And, it's moved lower for a significant period of time. So here we are rallying from, let's call it the end of September, early October is when the currencies all started to switch and when the stock markets all started to rally. Here it seems like we're having exactly the opposite moment. We're getting everything kind of topping out on these currencies and wanting to start to leak lower. So at least the pound still has the opportunity to hold above its 40-week moving average. But when we get into the euro, we're sitting very close to it. This uptrend line is already breaking. Again, we're making 3 lower highs on the PPO. That's typically not very good. And what we saw in 2021 was on the 3rd lower high in momentum. That's when we actually started to go below zero on the PPO. And that's when the euro really let go. So I'm very puzzled why all of a sudden all of these currencies are starting to break down. One of the other currencies that I like to watch for is the Aussie dollar. And again, this is breaking to new 2023 lows. So we're sitting here at 64.59 and 64.58 was the low. Looks like we've already made a lower low than the June low. So we're at the lowest levels of of 2023. But the question I have to ask here is, why all of a sudden are all of these charts starting to break? And the Canadian dollar was one of the ones that had held up a little better than the rest. And now it's started to fall below its 40 week. The uptrend it had here is starting to break. PPO's rolling over barely above zero to begin with here. Going all the way back to August of 2021, really hasn't spent any time as a stronger currency, and yet we're already looking like this currency wants to drop below zero one more time. So I am struggling to figure out why all of a sudden the quick change that all of the currencies around the world are starting to break down. And that's one of the things that I think is going to be a pretty important decision for us as we go forward. So in the newsletter for clients this weekend, I published a whole series of the currency charts and discussed why we're seeing these changes and how that compares historically, and why perhaps the changes in August here aren't just no big deal. We might have something bigger going on. So I think that's one of the critical areas for us to consider. With that, I want to go now and just mention a few other things that we have seen. And one of the areas, again, going back to roughly July 31st, that was roughly where everything kind of topped out, and we've been sliding for a couple of weeks. When we look in on things like Boeing and Caterpillar, big companies, what we're starting to see, this was pretty much August 1st, did make, I'll call it close enough to be the same high back on August 10th, but this is starting to break lower. And why are we starting to see these charts really changing quickly? So I'm a little bit worried that there's a sudden change, or a more important change, starting to show up again in the industrial area, the materials area, and then the next question obviously is going to be, will that impact energy? So these stocks had their scooter rankings up in the high top quartile, above 75%. At least they were some of the better stocks out there, and now they've been briefly there, but all of a sudden we're starting to see these charts break down. So for me, this is a question, and when I look at well, we can do, maybe I'll just do it as USO and XOP. This is oil and gas. Now what we see here is oil had been doing really, really well, and this all of a sudden started to fail quickly for the actual currency. I could bring up the dollar WTIC, but what I'm wondering, you'll notice we got a PPO sell signal today on the XOP, and on the USO we're on a sell signal now as well. Back in April, that was a place that we pulled down for 4 to 6 weeks before we actually, well, it was even closer to a couple of months before we were able to start getting any sort of rally going. So for me, I'm wondering why this is so weak quickly. And then we had the EIA information. Actually, I think it was the API data come out over just after the market closed on Tuesday, and one of the things we found was there was a huge draw in inventory, and we are worried that there's not enough production going on in the US, and what we're starting to see is the larger shale plays they're having to spend more. They're making bigger wells, but they're not getting as much oil out of them. So they have to. It's the bit of the treadmill where you got to keep going faster and faster and faster and faster just to keep up. And so we're starting to see the changes in these big shale plays, and if we start to see that in the Permian, that's going to add more pressure in terms of not enough production. So the real question here is, why are all these charts really starting to show, and is it just the US dollar, or is it a bigger deal? And I think that's one of the critical areas of the market. Now, if if it's not XLI and XLB, if those two areas are just going to continue, just having a brief pullback and then they start to get going, well, that would make a little bit more sense. But I think, this is meaningful selling day after day here. We were at 86, we're at 81, we were at 111, we're only at 107. There's a lot of stocks in these baskets. I think what we need to watch for as investors, if as we change, again, going back to the very beginning, what we saw was that the SPY and the QQQ got back to prior highs right here. And whenever you test this prior high, this is a pretty important place on a chart technically. So I don't want to get all bearish, but what I do want to point out is notice how this PPO starts to it rallied up to a prior high and then it started to give it back. And what you wonder is there enough growth going on to keep that going? And so as we've got these interest rates higher, is that what's happening? So let's just click on this chart. But what I want to change again, and I like to do this every now and then, just jump in. We're going to go back to 25 years. And what we see here is in 2000, 2001, so 92 was a level, we got up to 101, and then we took 9 months, almost a year, and got over here and checked the prior high in September, and then basically we said, oh, the economy isn't as good as we thought, and then that's when we started to break down. What happened in '07 was the same thing. We basically made a high, tested the high in the August, September, October timeframe, and then we started to come lower from there. And then that was really, it was that retest of the prior high. And in this case, it's been a long one, right? It was the high was from a year ago, year and a half ago. So do we have enough strength in the economy to kind of continue this growth out of here? And what we don't know, if we were to try and see something different, this would be one of the charts that could start to break down for us. So for me, again, I always want to be careful when you're at the prior highs, and we could do this with the SPX or the SPY. But when you're looking at these prior charts, again, the big thing, I'll just get rid of all of these other clear. So the big thing, again, you're at 1550, 10 years later, we got all the way back up, and 7 years later, we got back up and we tested around the same high, and then we failed. And then we took a few years and we got up here, and then we kept testing, so 1370, and then we got up a little higher. And then when we finally got this broken out, this was a pretty big deal. So we still have the interest rate changes coming from the Fed where things are tight, and that can put pressure on the economy, and it does take 12 to 18 months for that to flow through. So I want to keep watching here, and I'm not happy that all of a sudden all of the materials started to really take a big hit, and I want to check the industrials and make sure that they're going to be okay. So the shock action for me this week was all of a sudden seeing the letdown going on in some of those big areas. So with that, thanks for taking the time to join me on Market Buzz. You can also see the recordings on the StockCharts TV YouTube page. And thanks again for taking time to watch the show. Have a good week, everybody. Bye-bye.